All it's Brian from quantlabs.net. Couple of stories. This is from Bloomberg the last day. Um, Major indexes have bounced back, but they have dropped off. I'll show you another article of today. Euro has dropped off. The important one is the dollar falls over the long run. The yen has been going up, so there's the hedging of the defensive play for the yen. Another defensive move, obviously gold is going back up, has not reached the peak since 2013. That's another big defensive move. Here's another big defensive move lately is how the municipal bond funds have just skyrocketed. So to me, that's a big one. And that's pretty well that. Now, here's another article I wanted to show you from earlier today. Very important to understand this. The U.S. bond yield has risen. For the common person would not see this. Something to be concerned with the next topic I'll hit. The rise, it's costing more to take on U.S. bond, and it's riskier. So a lot of are now moving towards the European area debt. As you can see here in white, it's much higher premium, and as a result, it's in blue. Here's the European government, and here's the yield spread has been rising because of that, and there's definitely a relationship there, as you can see. Again, now hedging is an important factor. You can see that it did go up in 2008 when that crisis hit, spiked for a little while and then dropped down. So that could spike up again. Again, hedging for U.S. debt for yen investors. So as a result, the Japanese investors may not want to buy and hold U.S. debt, and that is the big takeaway from this, because there's a report of that in China that kind of spooked the market, but I don't know why this is not headline news. This has been like this for a while, and I think it's going to cause a real serious problem for the U.S. government to fund itself if nobody's buying the debt and wanting to hold it because they're losing confidence in the U.S. government and political system. And as we face government shutdown over the next few days, ka-chink, right? Okay, so today, again, January 18th, the markets just suddenly dropped off for a variety of reasons. I'll let you get access to these quotes. Now, this article that you may be most likely interested in is found on New York Times. .com. U.S. stock indices are mixed in afternoon trading. Now, yesterday there was a 50%, well, over 2 days, a 50% drop with the Bitcoin thing. So it's moving higher. So it's come back to 11,757. So it's up 5.5%. And the futures rose up kind of in line with it. CBOE futures exchange for that Bitcoin. One of the things that I like to see are daily moves. You can see here, like when you look at these DAX, FTSE, it's like 0.7, 0.3. Daily moves 0.4 for the Hang Seng, but you get 5.5%, which is quite good. If you're on that winning side, you're doing all right. Gold drop, silver drop, that's all because the markets have gone up. Oil prices have dropped. So who knows? Okay, here's another one. People are putting a lot of money into ETFs in this. I don't know what an ETP is. I've never heard of it. But ETF, let's say. Here's the growth over the last few years. People are losing faith in the direct stock ownership, so they put money into ETFs. The top 25 ETFs by net new assets. Obviously, I've talked about this before. iShares and Vanguard, BlackRock own the iShares. They're usually the dominant players, but globally, yeah, they still own it globally. Again, here's a new one, top ETPs. So I'll have to dig more into that. One way, if you ever want to measure the markets, just go to bar chart futures contract daily volume. This will give you a real-time look at where the professional money is going in the futures market. So you can see here 10-year note is up, or number one, and you always look at the volume. So people are putting a lot of money into 10-year note. The S&P 500 mini is usually the top pick, and that's usually retail traders because that's the cheapest contract you can get. But you can see quite clearly that these are all defensive. Bonds are up just based upon the volume. Gold is up there as well, and all the other stocks are not as active, but gas is definitely up there for seasonal. People are putting money into the euro for defensive moves once again. And then everything after that's pretty well small, but not a lot of heavy interest in crude oil. So there you go. Hopefully I'll help you out for January 18th. Have a good day. Later.